And so I think having people to really remind you that, we can have all of this, but if you lose the things that are most important to us, like our faith and our family and our marriages, what do we really do it for? And so that's been really key. Maybe it's just my background, but I think more importantly, it's been the people that I've surrounded myself with along the journey, guys like you, man. So I'm really grateful.
Hello, everybody. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. And we believe the key to scaling and compounding your wealth starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more or all of it away to help MVPs. My name is Brett Swartz. In every episode, we bring on an entrepreneur, millionaire, or billionaire, and they share their insights, secrets, and wisdom with us so we can all scale up in a way that, again, makes a bigger impact for ourselves, our family, and others. I'm excited for our next guest. He's a great friend of mine. He is He is a lot of things. And in fact, one of the cool things he's now the VP of Capital for Aspen Funds. And he's a partner with Aspen Funds as a fund manager. He also is the founder of Kingdom REI. It's a private mastermind for Christian entrepreneurs and real estate folks that are looking to make a kingdom impact, and so much more. Please welcome to the show with me, Mr. Ellis Hammond. Ellis, how we doing?
What's happening, Brett? Great to be here, man.
Yeah, it's another beautiful day. For our listeners who've never met you before, my friend, please give them a little bit about your story and your focus.
Yeah, great to be here. Yeah, I've done a lot of things. I've been a real estate entrepreneur. I started my career as I don't even say career. I was a college pastor. And so I relate to so much of what you're doing. My last job was probably being a college pastor, actually. And then I became an entrepreneur, real estate entrepreneur, because I had a vision to really build and create wealth to impact others. I could tell you, a quick story. I was about my fourth year into college ministry, and one of the young men on my team came up to me, and we were raising funds to support our ministry at that time, and he was part of our team. And he came to me one day and said, "Ellis, I don't have enough money this week to buy groceries." And that was a turning point for me in my life of realizing if I just serve God with my time, there was more I could do, right? And that's really where I got serious about building wealth and became a real estate entrepreneur. And over the last 7 years, I've been building multiple businesses around that. Today, I serve solely as the vice president of capital of Aspen Funds, which is a alternative investment private equity company based in Kansas City, where we we have several different verticals in the alternative investment space that we serve accredited investors. And the three verticals we're focused on right now. Again, we kind of take a macroeconomic approach and say, where is the tide going? And then we go all in on those verticals, building best-in-class teams and best-in-class strategies. And so today that's private credit. That is industrial, mainly in the Midwest. So industrial development with a lot of the reshoring trends happening or nearshoring trends happening here in the United States. And then probably the biggest fund that we have, or probably our best performing, and I would say where we'll allocate the most amount of dollars in 25 and in 23, 25, and probably again in 26 is oil and gas, the energy sector. So excited to talk about wherever you want to take this today. Yeah,
no, exactly. That's cool. That deals with oil and gas, because I think that's one of them that doesn't get talked about as much. And quite frankly, we're still, I think a lot of our clients at Capital Gains Tax Solutions, we mostly do real estate or private debt, right? So, but the returns and the cash flow, you'll tell us about can be really, really attractive. So I guess what's the number one secret, Ellis, when it comes to investing in oil and gas, and what do you best like about it?
Yeah, I mean, there's a lot. I would say, just like with anything, you got to kind of look at the macroeconomic narrative. I mean, just to give if you're not familiar with what's happening in the energy space, I guess if you watch the news, you might tend to think we're going away from oil and gas, right? Because, especially under the Biden administration, there was a huge push for EVs. There's a huge push for green energy. Here's the thing, Brett. We all want green energy to win. Am I wrong, right? Like, ultimately, that's probably the best thing for our world, right? For nature. Like, we want green energy to win. And we want to find alternative ways, for energy and for energy spend. However, the world is still mainly dependent on carbon fuels. Okay. I think that's, what I want your audience to understand, is that the need for oil and gas is not going anywhere for several decades. One of the shows that have made this really apparent in the last year or so is Landman, right? It's been, it's kind of taken off. And there's a great quote where, he talks about every industry is served by oil and gas, right? Pharmaceutical industry, automobile, food production, everything is supported by oil and gas. And so to think or to believe that this is somehow going to go away in our lifetime is it's really not thinkable. And then when you really dive into the details, JP Morgan predicts that by 2030 there'll be 7.1 million barrels shy a day of what we need from our oil consumption globally. Because, and if we can kind of get into some numbers or talk about the narrative today, but essentially, production from fields decline about 2 to 5% every year due to depletion. Okay. We need every year 5 million barrels of new production. Every year. That's how many we need of new production to just maintain flat supply. Okay. But guess what? We're not doing it. So, so it's like we have this growing demand, and then we have a declining supply. So when you think about it from a macroeconomic standpoint, well, what should you invest in? You want to invest in something that is supply constrained and is growing in demand. And that's what's happening with oil and gas, right? And that's exactly the narrative. And that's what we believe here at Aspen Funds. And, have all the data to kind of shore this up. The last thing I'll share with you is that, I'm looking at some numbers right here, but from institutional funding in 2017, Brett, institutional funding, there was 14.9, what is this? This is $1 billion of investment in 2017, 14.9 billion. By 2020, okay, there was $500 million of investment. By 2023, it's only up 1.6. It was in 2023, it was $1.6 billion of funding from institutional. Why? Because of ESG, because of all the regulations in this space. And so it's created this massive opportunity for funding that we, at Aspen are really bringing to a retail audience. So there's this huge demand for capital because of, the need for more drilling. And so that's what we're focused on. We're really, this is one of our 3 main verticals, and we're really going all in on here. And I can talk about our model because it's very different than what other people are doing. But again, I wanted to help your listeners understand, like, this is an opportunity for retail investors to really get into, what I would call a space that's really not provided opportunity for the everyday investor to invest in.
Got it. Okay. So yeah, obviously supply and demand is there. It's not going away. It favors continuing to explore and continue to get the oil. So, okay. So got that. What about just pure returns? Like if someone has $1 million and they're like, you know what, I got $1 million and I can go into these multifamily deals that are maybe, 15, 20, 30% discount from 2 years ago. Mm-hmm. I can go into, private debt, or I can go into oil and gas, right? So right. Make the argument for oil and gas as compared to those other investments.
Yeah, it's a great question. I mean, our last fund in its first year of production returned a 15% annualized yield on investment, cash on cash, without any type of, and that's not including the value we're building in the fund. And so, our 2 goals of our oil and gas funds are twofold. One is to grow cash yield year over year, and the second is to grow the overall value of the fund. So
if they put $1 million in, they got $150,000 in cash flow on average. Yep. And then second, they're also the ability to value of the fund. So the fund value can go up over time.
Yeah. So that fund right now is valued above 30% in value on an IRR standpoint.
So if they went from $1 million in, they got $150K of revenue of cash flow, and then they also got a bump. So their $1 million is now worth $1,150,000 as well, like separate from that. Is that a fair thing? Or
well, I would even say, just 30% on their, $1 million, plus another 30% would be their money would be valued at $1.3 million.
Okay, so it's not even including the cash flow. So
exactly.
Yeah, and so potentially, if they were to sell the fund today, although it's maybe longer term, right, that they would get their $1 million back. They already got $150,000 from this last year or two each year, and they're getting another 300,000. Is that what you're saying?
Yeah, and I'll explain this. And we expect cash yield to grow in that fund. That fund is closed. Yeah. We're in the middle of launching our which is UEF Fund 7. Mm-hmm. So our seventh oil and gas fund. And what's different about our focus and the reason why we can grow cash yield and grow the value of the fund is what we do. We have, again, I told you that the primary objectives is to grow cash yield year over year and grow the value of the fund. And so I'm going to pull up a couple of slides here. So the first thing we do is we buy existing production with immediate cash flow. So most of the oil and gas opportunities, when people think oil and gas, they think huge write-offs, huge risks, right? All exploratory. You either hit it big or you don't hit anything. That's not what we do, right? That's never really been what people are trying to do in that type of scheme is they're trying to maximize their losses. And typically there's the opportunity to be a GP. And so you can take those losses against active income, which is a nice benefit, but it's hit or miss in terms of overall value. So you're taking the loss, but what about actually maximizing value and total return? That's not what our focus is. So what we do is we own the non-operating working interest or the overriding royalty interest in the drills of the land, right? And so we'll go out and buy very large acreages of land with several hundred existing wells already there. And what we own is the non-operating working interest, meaning we're not the ones doing the drilling. We're participating or essentially, owning non-operating interest, working interest in the production of these wells, right? And so we have the ability to participate alongside some of these very, very large oil companies. And I can give you names. Your audience may or may not recognize them, but typically often publicly traded companies is who's already drilling on these lands, right? So we're getting access to very institutional quality drilling, production type activity. And so that's why, for example, in Fund 6, we were able to give a 15% annualized yield in year one because we're buying, think about like a stabilized multifamily deal. That's what we're buying into immediately. But when we're buying this, when we're buying the assets, we also have the ability for future drilling or future production. And so because we own the non-operating working interest in the land, we have the option to participate in new drilling that is proposed by the operators and then decided upon by our internal team of geologists and engineers. So we say, let's say one of the big companies comes and says, hey, we're gonna drill. Do you guys want to participate in it? We have the ability to allocate, a portion or some of our capital into these different drilling opportunities. So that's how we're able to grow yield and grow value. And so, like for your listeners, think of it as we're buying existing multifamily with a cap rate in place. That cap rate for us is typically very high, but we also have the ability to go develop additional multifamily, right? Or additional drilling, which allows us to grow cash flow and it allows us to grow the overall value of the fund. And again, this is all in the States, mainly in Oklahoma is where we're focused. So this is domestic oil and gas, which in a lot of ways kind of limits our downside. Again, when we invest in new drilling, we're a very, very small percentage of a very, very capital intensive program. So typically we might have 1 to 5% of the piece, which allows us again to diversify, reduce our risk. And we're not doing this with mom and pop. So imagine putting, $1 million or $2 million alongside of a company who's spending $25 million to make sure this is a producing well. So we feel very strongly that from a risk adjusted standpoint, clearly there are risks in every investment, and oil and gas is no different. You have commodity pricing, you have different things. But it is a very, it's access to a very institutional quality product in the oil and gas space, in our opinion. Okay. Yeah.
It's really interesting. So what about capital gains tax as it pertains to that? It's like someone sold something for $1 million and had $1 million gain. And they're like, hey, I want to maybe, instead of using a deferred sales trust or 1031 exchange or an opportunity zone, like I like the oil and gas because it gets a higher cash on cash return. Can I, for your guys' fund, is it going to help them with that capital gains tax?
No, they would need to pay the tax on that before they would invest in this. There's be no ability to essentially roll that into this.
Okay. For what you guys set up for your particular real estate or oil and gas fund.
Right.
Right. So that means they could use the DST with the oil and gas fund. So that's a good point,
Absolutely.
right? So,
they could definitely use the DST into something like this. would be probably the only way to defer any of those gains.
Okay, that's good to know. So if anyone's curious about that, you can kind of get the best of both worlds. I found a lot of people really want truly passive income right now, Ellis. Like they don't, like most of our clients that are exiting now, they're like, man, like I just want massive cash on cash, consistent, durable income.
Yeah.
Every single month or quarter, right? And I don't have to think about it. Like we have a saying that says truly passive income is to your freedom and impact as compounding interest is to your money. And like what I think the thought here of like Rich Dad Poor Dad, like, you know, the Purple Book, right? All that, like people, especially as you get older, like they're like, I want to trade my time, my energy, or my risk, or my debt, or my all this to get to that point, right? I mean, the bottom right quadrant is down there. You know, if you're looking at the Rich Dad Poor Dad kind of quadrant, and that's when you can money, is working for you. You don't do anything. Like they want to just jump to that. They want to just go to, they want to go to just, you don't want to buy Park Place and Boardwalk and all of the other things and manage it and deal with it. Like they're like, how do I exit now? And how do I get like massive cash on cash return now? Right. And like when you show them that, like, you can do it now. You don't have to wait another 5 years or 2 years or 3 years. Like, no, you can exit now and you can defer that tax. And you can get into places like Aspen Funds with their oil and gas and things that are double digit cash on cash returns that are durable, consistent.
Well, let me give you a case study of something that we put into like one of our funds. Okay. So one of the areas that we produced, this was about a 10,000 acreage area. Purchase price was $30.5 million. Okay. There was 140 producing wells. From those 140 producing wells, the net cash flow was $8.7 million. Okay, do the cap rate on that. There's no multifamily deal in the country that is giving you that type of cap rate. On top of that, there were 68 proven, meaning is already proven that if we drilled, there's going to be production of undeveloped locations. And so that's where the ability to reinvest in more production. And so I think, I'm not sure where barrel pricing is today, but let's say it's around $65 today. At a $67 price per barrel, that the IRR of that one case study I'm giving you is in excess of 50%, right? So again, that's just one case. I could give you another one. Purchase price $10 million. We have a net cash flow of $3.6 million. 29 wells across 886 acres with another 5 proven undeveloped drilling locations, right? Another $6 million. I mean, this is crazy. $6 million in net cash flow of $4 million. There was 14 wells there, producing wells. So this is the type of stuff where you talk about passive income. There's going to be a little bit, again, the volatility is a little bit greater here in oil and gas because you have commodity pricing, right? Commodity pricing, it can be extreme. I mean, we saw that in COVID where actually commodity pricing went negative, right? So there is a risk here. However, one of the things we do to hedge that risk is we actually have a hedging program. And, that, not to go into that too much, but essentially we across our portfolio, there's partial price hedging, which allows us to reduce the price variance and to cover our debt service costs. So what that means essentially, if we limit our downside by hedging our prices. So if the bottom falls out of the cost of a barrel, we have a hedging program in place. However, it also limits our upside. So if the pricing goes to $150 a barrel, we're not going to get all that upside at $150 a barrel, but it also limits our downside. And so that's one of the ways that we're kind of able to, again, we're not going to take everything, but at the same time, we're not going to absolutely get smashed in this investment. I think that's really important for us. Again, we're investing other people's money, and so it's not all about taking all that we can get, but really trying to find a really strong total return for our investors.
I thought consistent, durable cash flow, right, without any excess, or with minimizing risk as much as you can.
Yeah.
Right. That makes sense. And what else about oil and gas that would be attractive, for people to hear? Or what questions haven't I asked you so far I should ask you?
Well, I mean, there's definitely massive tax benefits, right? I mean, there's in our fund, this is a passive investment, and so all income is passive income. And, you essentially get losses in two ways. Depletion, there's natural depletion. Think about depreciation of a real estate deal. There's depletion losses in oil and gas. And then there's also drilling costs, because there is, massive amounts of costs that go into drilling. Those are losses that we get to take against the income of the fund. And I would say tax benefits are as good or better than traditional real estate, because the intangible drilling costs, what we call IDCs, which again make up a majority of our losses because there's a massive amount of capital that goes into drilling, are 100% write-offs with no recapture tax. So the big thing about real estate, of course, is if you take bonus depreciation and then you go sell the asset, guess what you have to pay? You have to pay recapture tax, unless you're working with you, Brett, right? And you have the DST, or you're going to 1031. You're going to have to pay recapture tax. The best thing about oil and gas is you do not have to pay from a tax standpoint. There is no recapture tax. So you've received all of this loss to offset the income, the massive amounts of income we're generating from the fund, which you don't have to pay the recapture tax when we sell the asset. And I think that is a massive advantage in this fund for cash investors.
So let's break that down. So like a million goes in, and I got $150,000 worth of cash flow that year, but I got some tax advantages to offset that. Mm-hmm. So maybe only pay of that 100,000. Like break me that down. And,
it really depends on the year. I mean, I would say in 24, for example, there was probably enough losses to cover, I think it was 70, don't quote me on this, but 70 to 80% of the income generated.
The 150. So I'm imagining it had 150,000 is what it generated, right? On the $1 million. Yeah.
I'd have to look at, I don't have a tax.
Even 50% of that. So let's just do 50%. Right. So 75,000 was sheltered, even though you got 150. You only pay tax on 75, right?
Right.
And then fast forward, the fund goes for 5 or 7 or 10 years. They sell it. You're saying that all of those years, let's say on average, you got 150 per year, and then 75 every year was not taxed. Mm-hmm. You're saying that depreciation would not recapture.
Not recapture. There is no recapture on that. On the majority of it, because the majority is IDCs, right? In terms of like the drilling costs, and so that's where that's what you're not paying recapture tax on, again, which is a majority of the losses because of that. Yeah. In our fund, it's important for investors to know is like it's not like you don't pay any taxes on the, any passive gains on the taxes on passive gains, because again, we generate more cash than we have in losses, which is a great thing, right? Like ultimately you do. I mean, some investors say, no, I don't want to pay anything, but in most cases they're not making enough in income. But absolutely, this is definitely tax advantage income coming in, and from a long-term perspective, there is no recapture tax. We're speaking with
Mr. Brilliant. Ellis Hammond, everybody, and he is with Aspen Funds, and he'll share the website here in a few minutes here. Okay, I think we've covered most of it, Ellis. Unless there's anything else you want to cover on the oil and gas, and then otherwise we can move into the lightning round.
Let's do it.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
My 20-year-old self, I would definitely say marry Hannah, which is what I did. Make sure you don't screw.
Married to everybody, in case you're wondering.
Don't screw that up. And I would just, I think I did it right, man. Like invest in relationships. Your network is truly everything. Who you know and who you're being mentored in your 20s is so key. And I think I did that. Like in my 20s, I was a missionary. I was in ministry most of my 20s. I didn't jump into business until, almost 30 years old. And I look around, I'm like, I don't think I missed a beat. Like I'm where I want to be. And it's because like the maturity and the wisdom that I feel like I have in my mid 30s is because of who I was under in my 20s. And I think that's exactly what I want to, encourage young people today is, those early years, it's more about who you're with and who you're under and who you're learning from than what you're doing.
Awesome. Right on. Question number 2, what's the number one book you recommend or gift the most in the past year?
Oh my goodness. What book have I recommended the most? So many. Let me pull up here. I've really listened to some good books. 10X is easier than 2X is probably a big one. The other book I have absolutely enjoyed for our company is Know What You're For by Jeff Henderson, forward by John C. Maxwell. Jeff Henderson was one of the top marketing executives for Chick-fil-A for several years. And this idea of knowing what you're for is just transformed our business. It's like one of the quotes in there is that customer service is like it's what everyone expects. Like good customer service is what everyone expects, but like customer experience is kind of the next wave, and how people know, like they want to know what you're for. And so I've absolutely loved this book. It's totally transformed our company, and really trying to think like, who is Aspen going to be over the next 10 or 15 or 20 years, and what do we really want to be known for? So I love that book for any entrepreneur or business owner or any executive leading people. That would be a book that I've recommended the most.
Sweet. Awesome. Next question. Number one leadership quote or theme that you strive to live by.
I love John Maxwell. I think, he talks about leadership as influence, and I think that's so key. And, I think of Jesus's words that if you, the best leader is a servant leader, and I think that's something I'm continuing to try and grow into is, the first shall be last and the last shall be first. And so I think that's what's true. And what we want to be known for here at Aspen from a leadership standpoint is having a culture that really cares for not only our investors, but our employees. And so that's what I'm trying to live by, I'm trying to have influence, but do that in a way that is not top down, but really is trying to serve other people. So that's a big one.
Awesome. Last question. How do you best stay centered, Ellis, in your values and stay encouraged to charge forward to reach even higher heights?
I think a big one is the people I surround myself with, my wife being one of those. She's not in the business. She's a stay-at-home mom, and I'm home. I'm clocking off at 5:00 to go and be with my kids. I'm not gonna say I don't work after they get down, but I think that's a big one. And I think family is really important to us. So my wife is such an encourager in that. All of our executive team here at Aspen are faith-based, and we have a lot of conversations about what's important to us. I mean, we look around and a lot of our friends have what they want, but maybe no longer married. And so I think having people to really remind you that, we can have all of this, but if you lose the things that are most important to us, like our faith and our family and our marriages, what do we really do it for? And so, that's been really key. And I feel like I've always, even the community that I started with Kingdom REI that you talked about, I mean, that's what the whole thing was for, is like, how do we really become real estate entrepreneurs, ultra successful, but do this in a way that honors God and keeps the things intact. And so that's always been super key for me. Maybe it's just my background, but I think more importantly, it's been the people that I've surrounded myself with along the journey, guys like you, man. So I'm really grateful.
Hey, Ellis, it's been awesome to have you on the show, sharing your story. Great to be your friend and great to be a brother in Christ with you, brother. I appreciate you coming on, sharing some wisdom, giving us insights into the oil and gas. For our listeners, if they want to get in touch with you, what's the best way for them to find you?
Yeah, if you really want to deep dive into oil and gas, go to aspenfunds.us. You can see our offerings. There's an offerings page there, and it'll take you directly to our oil and gas standpoint. Aspenfunds.us would be the best place to go. Or you can reach me directly, which is ellis@aspenfunds.us, and just type in Brett Swartz in the subject line. I know where you came from, and I'd be happy to talk with you directly.
Awesome. Thank you so much, Ellis, for being on the show. And I also want to thank all of our listeners for listening to another episode of the Build Up Billions podcast. We're also streaming on Capital Gains Tax Solutions podcast and YouTube channels. And we're here to scale from millions to billions so we can get more all over the way to help MVPs. And we want to encourage you to do the same. Like Ellis is saying, be more available for your family, more available for your community, be more available to bless others as you build it from millions to billions. So I appreciate everyone listening and watching out there. And we will talk to everyone again real soon. Bye now.